Hello, this is Andy Hill of Andrew Hill Investment Advisors, and I wanted to give you a quick update on the financial markets. As today concluded a rough week in stocks and a rough month, I wanted to give you an idea of some of the things that we're looking at in the month for the month of September. First, we concluded a down day today with stocks trending lower while bonds and commodities made small gains this week. The concerns that led to the sell-off in stocks were certainly focused on Syria and the potential military action of the United States and possibly other countries. And a secondary factor has been Larry Summers, who's now rumored to be the front-running candidate to take over for Ben Bernanke as chairman of the Federal Reserve. With that, these concerns, we have been paring back on some equity holdings, primarily ones that are not performing very well, and we've begun nibbling on bonds, specifically in the municipal bond area. We'll take a closer look at the charts of both stocks and bonds in just a minute. As we look to September, we have a number of hurdles to get over. First and most obvious in the news, we'll have to deal with the issues in Syria, potential actions by the U.S. as a result of the chemical warfare against their own citizens. And Egypt we can't forget about either, although that's not been a focal point this week. That's still out there. Not only is it an issue that we look at what's going on in those specific countries, we're also focused on what Russia may do depending on our actions. Federal Reserve leadership, although Larry Summers has been rumored to be the front-running candidate at present, investors would probably prefer Janet Yellen, the vice chair of the Federal Reserve, to take that position. Yellen is considered to be a less polarizing and not a politician as Larry Summers, who has been involved in numerous political appointments in the past, and somewhat of a volatile personality. Generally speaking, I think investors would prefer the more sedate Yellen taking over the Federal Reserve. Nevertheless, until that nomination is appointed, investors will be uneasy. Keep in mind, we also have sequester coming up the 1st of October and a debt ceiling that the Secretary of Treasury indicated will need to be approved in mid-October. So investors will begin to start thinking about those in the weeks to come. Economic data, although we had a good GDP revision up 2.5% earlier this week and rather sedate inflation data today, CPI up only 1.2% over prior year. Other data has been somewhat meager at best. And keep in mind, September historically is the worst month of the year for stocks as a number of calamities have come forth. While it can be a down month, it can also be a good buying opportunity for stocks. Let's take a quick look at the 10-year Treasury yield, and keep in mind this chart goes back to 2008 as we saw the big dip in yields as quantitative easing took hold, bottoming out 1.3% back last summer, and the sharp rise more recently. It looks like when we got up to 2.9% recently, that was somewhat of a ceiling. Investors came in, and that may be partly due to the turmoil in the Middle East that investors began buying treasury bonds for safety in the past couple days. Moving on to the equity market, and this chart goes back to late last year, a nice run up earlier in the year, and then the sell-off in early summer, another rally to all-time highs at 1700 on the S&P 500 in early part of August, and it's been all down since then. And with this week, the huge sell-off that we had of over 1.5% on Monday, and we weren't able to repair any of the damage. And actually today we closed on a low note. So with that, looking forward, strategy implications. Although we've been overweighted all year long in stocks, which has been the smart place to be because that's been the best performing asset category, we began reducing exposure. And this week we took a pretty big chunk out of our equity holdings with selling 3 weak performers, Chico's, Corning, and eBay, and took some profits in Lincoln National that actually had done very well this year, but may be subject to further selling should the correction in stocks continue. bonds, which have been underallocated all year long, again, a wise asset allocation decision, we got nibbling on various bond issues, specifically the munis, which have been particularly hard hit. And this all results in a much higher than normal cash balance. And at present this morning, we actually had up to over 10% cash across all of our accounts, which is much higher than we normally have. So with that, to wrap it up, it was a rough week and a rough month for stocks. Although we have begun to position ourselves for the challenges that we'll probably see in September of more volatility, but with a little higher than normal cash, we'll be able to take advantage of any bargains that may happen and present ourselves as we have developing a new shopping list of companies that we find particularly attractive. With that, hope you have a good Labor Day weekend, and thank you for your interest.